All right, good morning, everybody. We are back for the pre-market rundown for Cinco de Mayo edition. I was actually out of town all this week. Give me a second also while I go ahead and post the link to my Instagram story for this live session. But very, very excited to be back. Getting back into routine. Need that. Absolutely need that. So I'm excited to be back. And to finish out this week strong. It's been a great week, and I'm going to look to continue to build on that. Again, going to go ahead and throw this on the Instagram story, let everybody know that we're back in business, rocking and rolling. I know I already did, but I want to cover my tracks. Hope you guys have had a great week. I'm excited to get a full night's sleep last night, right? And then get up and get back into things this morning. Did not get my full morning routine in, but I still, got up and, had like what I felt like was a great morning. So that's important, especially as you try and get back into the swing of things. When you have some type of event or something that disrupts your routine, it can be tough for you to get back in, right, and execute, get back on track. So it's just important to make sure that whenever you do that, right, because we know that trading is like 99% mental. Whenever you do hop off your routine, something disrupts it, and then you come back, just don't try and heap everything back onto yourself at once, because that's an easy way to get overloaded, right? My normal routine, I'm up, I run my 3 miles, come back, work out, do some abs, all that stuff, right? Protein shake. All I needed today was a good amount of sleep, right? Didn't get home till late last night. So all I needed was some good sleep, wake up, nice, easygoing morning, and then dive into this. And that's exactly what I got. So I'm very, very grateful for that. But just, a little nugget here, since, again, trading majority mental game. Let me go ahead and drop this link now, live now, for our pre-market. Might throw in a little Cinco de Mayo for our Cinco de Mayo pre-market prep at the link below. Boom. Awesome. And we are rocking and rolling from there. Toss the link in. Cool. Let's do it. Boom. Bada bing, bada boom. And it'll take people a second to get back, but it is what it is, right? They got to go ahead and rock with the punches and watch the replay, whatever it takes. But I'm excited to be back here, right? To be diving into what we have going on today. We had big behemoths report yesterday for earnings. We had some, not so big behemoths report and absolutely do what they normally do, which is stumble and fall, right? Alicia, good morning. Welcome back. Yes, good to be back. Great to be back. Ecstatic to be here and to finish off this week strong. Let's see exactly what we got going on in terms of notes. But as always, guys, whether you're watching live or via replay, make sure you drop that one in the chat. Right, we're trying to do one thing and one thing only, and that's get 1% better by the end of this session. That's what we're looking to do every day, always, right? And if you do that, you get hundreds of percent better year over year, thousands of percent better as the years pass by. You can close the gap, right, and accomplish your goals. But it all starts with getting 1% better. Manageable goals and consistency. That is the way. So make sure you comment that one. And without further ado, man, it is great to be here. Great to be back. I'm going to dive into this cooling labor market, which is our top news for the day. So in the non-farm payrolls report due to be released at 8:30 a.m. Eastern Standard Time, economists expect that 178,000 of jobs were added in April, down from the 236,000 increase in March. While the April estimate is relatively robust, it would be far lower than the average monthly gain of 344,000 over the previous 6 months. Generally, the economy needs to add about 100,000 jobs to absorb new entrants into the workforce. In parentheses, the higher number of new jobs above that figure, the harder it is for employers to hire as demand outstrips supply. Now, in terms of snapshot, with the labor market remaining so tight, the Federal Reserve has felt confident in its inflation fight, raising its interest rates without inflicting too much damage on the economy. On Wednesday, the central bank increased its policy rate by another 25 basis points, bringing it to 5% to 5.25%, the highest level since 2007. Powell also said there were signs that supply and demand in the labor market are starting to come into better balance, but, quote, the labor market remains very tight. Another data point to watch will be the unemployment rate, which is expected to tick up to 3.6% from 3.5% reported in March, Wage growth will also be eyed, with average hourly earnings expected to rise 0.3% month over month in April, unchanged from March. On a year-over-year basis, that compares to a 4.2% increase, the same as in the prior month, while the labor force participation rate will be analyzed for its effects on wage-driven inflation. Now, in terms of outlook, no doubt the Fed policymakers will parse the report for any signs of re-accelerating wage growth or renewed strength in hiring. If there is one prime focus of the Fed's inflation fears, it is the strong labor market, right? Seeking Alpha contributor Harry Mamaski. So if the U.S. does indeed add 180,000 jobs in April, it would mark the smallest monthly gain since December of 2019, excluding the losses that occurred during the first year of the coronavirus pandemic. So we've got, all in all, a cooling labor market, which we expected, right? We've been talking about really for the last 6 to 8 months here on the pre-market preps, right? Pre-market rundown sessions, going over, the increased layoffs that we'd see across the board. The Fed has a dual mandate to maintain full employment and to keep inflation low. When they only have to worry about keeping inflation low, they don't care about employment. But, as we see employment start to weaken, the Fed might, start to, okay, maybe we pull back on hiking interest rates nonstop and we go ahead and we focus on maintaining full employment. So that's the hope, right? And that's why the market has the relationship that it does with employment data, which is, employment data being better than expected ends up being bearish. Employment data being worse than expected ends up being bullish, right? So you want employment data to be worse than expected, whatever that looks like for that specific data. Let's check out here what the data is that we got this morning. So it looks like U.S. labor, April, non-farm payrolls up 253,000, consensus 180,000. So that is bearish, right? For things, you got the non-farm payrolls up higher than what was expected. Then U.S. April unemployment rate 3.4%, consensus was 3.6%. So you have unemployment rate lower than what was expected, right? That's bearish. You want unemployment rate to be higher so that the Fed pulls up and stops hiking. Right now, we have unemployment rate coming in lower than expected. You have U.S. April average hourly earnings up 0.48%, yada, yada, yada. Let's see here. Two-year U.S. Treasury yields up 18.9 basis points. Traders of short-term U.S. interest rate futures price in small chance of a Fed rate hike in June after jobs data. So overall, it was kind of one of those things where we got, information from Powell this past week talking about whether they're looking to continue to hike. And this jobs data really gives a lot of context toward that decision, right? Because again, if the jobs market is strong, they can continue doing what they're doing. They don't have to worry about pulling up. So the bank failure issue might be playing a role, right? It is playing a role. So maybe they still don't hike because of that. But as of right now, with us seeing continued, strong labor market, the Fed has no reason to pull up from that regard. So, that's some drops in the buckets for the bears this morning as we get that employment data that came out. Now, let's see what else we got going on here. For our Cinco de Mayo pre-market prep, I feel like I should have gotten like a hat or something. I don't know. That might be cultural appropriation at this point. Not trying to get canceled messing around in 2023, so I'll keep on the hat that I know I won't get in any trouble for. In terms of earnings news here, got to talk about, one of the biggest companies in the world. iPhone strength. Apple shares rose 2.5% in after-hours trading on Thursday after the tech giant reported Q2 results that topped muted analyst expectations while unveiling a new $90 billion share buyback program and raising its quarterly dividend. So Apple kind of trying to incentivize people to buy Apple. Companies love announcing buyback programs when they think people aren't buying the stock, like right now, when they had their executives selling billions of dollars worth of stock. They're like, hey, don't pay attention to that. Just look, we're buying it back, right? We got these buybacks and we're increasing the quarterly dividend. Like, you want to be holding Apple stock, right? It's kind of like the people who are like, hey, please buy this amazing chicken. It's not like it's expired, and that's why we're sitting it out front of the store, right? Come and purchase it, please, please. Right, that's kind of like what this translates to. But overall, not a surprise that Apple beats. I mentioned that in the Facebook group. I mentioned that every earnings season, Apple tends to beat, right? They just do. That doesn't always mean that they are going to push, right? They're going to rise off the beat. During COVID, they beat and they dropped. But typically, Apple beats expectations. That's just Apple's MO. And I feel like this, also is pretty in line with what we got from the rest of the big tech companies. I mean, we had the rest of the big tech companies beating across the board, and Apple is always really the strongest of them. So, Apple beating, not much of a surprise here. It doesn't look like there was that much movement, really. I mean, rose 2.5% in after hours. So it wasn't like it went to the moon or anything. For those that played earnings, hopefully they got a large enough move, right? Because I know that they priced that in from the beginning, but there will likely be some IV crush there, even for those that did predict the correct direction of Apple. And I think, again, that just further underscores how much of a crapshoot earnings is, right? You need the big move because they price in the fact that there will be a move. Let's see here. Revenue is helped in terms of Apple by iPhone sales and services, though some weakness was seen in Mac and iPad segments, and overall sales fell for the second quarter in a row. Quote, we expect our June quarter year-over-year revenue performance to be similar to the March quarter, assuming that the macroeconomic outlook does not worsen from what we are projecting today, Apple CFO Luca Maestri added on a conference call. While CEO Tim Cook said in a follow-up interview that the iPhone maker remains, quote, extremely prudent on hiring, just at a lower clip level than we were before. So I mentioned that as well, right? Apple, the strongest out of the big tech behemoths, really, and they didn't have to do any layoffs. They haven't done any layoffs. I think all they did was pause hiring finally, much later after all the other big techs did, probably a year later after all the big techs paused hiring. Apple's just starting to pause hiring, but they haven't done any layoffs. So I think it just speaks to, how strong of an operation that they're running over there. There's no, not a bunch of excess fat. And even if there is, they've got plenty of, free cash in order to supplement it. So they're like, hey, we're keeping our employees. And I think that really is a shining beacon of light and hope to other, big tech talent that's looking of where to go. Because, you look, you're like, okay, maybe I get a job at Meta, but also Meta is notorious for overhiring and not really knowing what the heck to do with that talent. So maybe instead they're like, I'm going to go over to Apple, right? Because when the rubber meets the road, Apple is prepared, Meta is not, right? So that's kind of, in terms of the employment market and that constant battle that's going on for tech talent. I think Apple really, really shining through there. Now, let me see here. Sombrero would have been epic, LOL. Yeah, I think it would have been pretty awesome myself, to be honest. In terms of tech news, blueprint for AI, with artificial intelligence in the headlines and fears about what it can do to society, the White House convened a meeting yesterday that sought to explore the dangers to public safety. Vice President Kamala Harris and senior staff meet with the CEOs of leading AI companies like Google, Microsoft, OpenAI, and Anthropic. Quote, it was a frank conversation which included discussion on three main things. Let me see here. Press Secretary Karen Jean-Pierre said at a briefing explaining the requirements needed to ensure AI systems are secure from malicious actors and attacks. The Biden administration previously put out a formal request for comment on potential AI regulation while stocks continue to move on AI buzz. The latest beneficiary is Advanced Micro Devices, or AMD. Now, in terms of financials here, and just kind of speaking on AI, right? Everything that we want to be a long-term part of our lives needs to be regulated, because we see already happening in the music industry, right? AI just being used for tons of different things, for scamming. So it's just one of those things where when new technologies come along, there also comes, the evolution of thieves, right? Liars, scammers. That's just how it goes. Once the internet came out, people used it to scam, right? Once vehicles came out, people used them to rob, right? It's like whenever new technology comes out, might be new technology, but people remain the same, right? There's always going to be bad actors, and they're just trying to get a lid on things, right? Figure out what the heck to do, in order to, because this is technology that, again, is some of the most influential technology that humans have ever seen cross our paths, right? And it has very, very destructive potential if not regulated. And I think that's what they're looking to do now. Will it happen quickly enough? I don't think things really ever do in the U.S., unfortunately. In terms of financial news, regional bank rout, U.S. federal and state officials are looking into whether market manipulation has prompted the recent volatility in banking shares, according to Reuters, with short sellers raking in nearly $380 million in paper profits on Thursday alone from betting against regional banks. The brutal sell-off saw PacWest, ticker PACW, and Western Alliance, ticker WAL, plunge 51% and 39% respectively as investors grew nervous about strategic options as well as the possibility of stockholder wipeout. Others are attributing the drops to self-fulfilling prophecies, though First Horizon, ticker FHN, also tumbled after calling off its merger with TD Bank. Meanwhile, billionaire activist investors like Bill Ackman and Nelson Peltz are warning that more regional banks will fail unless deposit rules change, while the FDIC is looking to propose new payments on larger banks to replenish its deposit insurance fund. So this whole regional banking situation is heating right back up, right? We saw it kind of cool down for a bit, and then it came back when whichever one it was, like finally, I guess, went bankrupt and had to get taken over by JP Morgan. I don't know if that was First Republic. I can't remember the names at this point, but it heated back up earlier on this week, and now it's full-fledged on fire, right? The block is hot. PacWest tanking, Western Alliance tanking. So we're right back into the thick of it, and people are very, very nervous about this, right? So this is something that could go on to continue to have repercussions and reverberations throughout the economy. I think at first it was kind of like, okay, are we one and done, like, or a few and done, and now we can move on? No, right? I think this just tells us no. This can be a thing that is ongoing, and every single bank that fails has an exponential effect. It's not like, oh, one more bank fails, so that equivalent of people who banked at that bank, they're going to like pull their money out. Everyone sees another one, and 5 times that many people move their money out of banks, right? So that's what's important. It is not a one-to-one effect, like one bank fails and only their customers are scared. No, everyone gets scared. It's a contagion effect. So that can be another one of those things that pushes toward, the market and the bearish sentiment, right, that we've been seeing. Number one, pats on the back, right? Talked about May being a month in which we get selling. Talked about how we had the possibility to get selling based off of what we saw in the charts. Selling is what we got, right? So once again, we don't want to overlook that. There are plenty of people that are struggling to get a handle on this movement. We have had a handle right on top of it in the midst of it still being a busy week. So I think that is very, very important to point out, very, very important to acknowledge, because I feel like not often enough, we always focus just as humans on our mistakes and really never enough on our victories. So we want to make sure, that it's very well known that it is not easy out here navigating this market. There are plenty of people that lost tons of money or were too scared to execute based off of the movement that we saw, but we were right on top of it, right? Got the shooting star on the daily, right? We have that potential daily double top that we have forming out now that we'll be watching. We have that potential weekly double top that we talked about last week on the Q&A, right? So we have the potential for that next leg down to begin. We've already started to see some selling, right? But it's really only been, 4 days of selling, 3-4 days of selling, like, could be just the beginning. So that just further underscores the fact that you need to be ready to make money off the downside. If you aren't, spend money to get that knowledge to learn how to get it, right? Everybody's so concerned now with the fact that the world is just drowning in information. It does not matter if you don't have wisdom, if you don't have knowledge, if you cannot apply that information, you having it does not matter, right? And I feel like I need to make a reel about that, because everybody just thinks, oh, I've got access to all this info, I'm just going to use it, right, and get rich. Are you? Right? Are you? Have you done it thus far? No, that's the whole thing with social media. There's so much info. No one does anything with it, right? We get this free info. We go, oh, awesome. People owe me this thing for free. And then we don't do anything with it. We don't value it, right? The only way that you value something is how? If you pay for it, right? In every religion, in every, whatever you want to look at, you have to pay for something. And that is the only way that you value it. There's always a price, right? Otherwise, something does not have value, really. You don't value it. You don't attribute value to it. It could be valuable, but you don't attribute value to it because it does not have a price. Everything worth having, the reason why we know it's worth having is because it costs us something, right? So don't be afraid to say, okay, I need to go and pay for this in order to get this skill, because you won't value it unless it costs you something. If somebody gave you a Ferrari for free when you were born, you wouldn't value it, right? You'd learn when you got older, oh, other people value this thing, so that I value this thing, but you don't value it, right? Because you get it for free. Your parents, when you have amazing parents, sometimes you don't value it until you get older, and you're like, oh, wow, now I see the value that's there. When you get things for free, it's very tough to see the value, and all you do is end up staying in the exact same place. So pony up, right? And that is what keeps you honest. You know why I make this content weekly? Because I pay someone to go in, right? I pay a team to go in to edit this, get it back to me, right? Critiques, all that stuff. That's why I'm on it, because I know that I'm paying them, right? Otherwise, if I'm tired last night, right? Get home, 14-hour trip. What am I doing? Recording content. Recorded content last night. Could barely keep my eyes open, but I'm recording that content. Why? Because I pay. Because it costs me, right? It's very important to recognize that drive is different when you are paying for it, and that's what can help keep you consistent. So I feel like people don't realize really the accountability benefits that come with paying for something, right? It's really been lost on us, especially in this generation where we have so much available for free. Now, in terms of today's markets, we're looking pretty green across the board. In Asia, Japan, we're closed. Hong Kong up 0.4%, China down 0.5%, India down 1.1%. The FTSE in London up 0.4%, Paris up 0.5%, Frankfurt up 0.8%. The Dow up 0.4%, S&P up 0.6%, NASDAQ up 0.6%, crude oil up 2.1%, gold down 0.5%, Bitcoin down 0.2% to $29,104. We already went over non-farm payroll and employment stuff. That came out at 8:30 a.m. In terms of data, that was probably most important. We do have Bullard, a member of the Fed, speaking at 1 p.m. He can move markets, so it's important to note that. Be aware of that. Bullard can most definitely move markets, so if you see any volatility at 1 p.m., that's likely what's happening. Now, what else is happening? We'll wrap up here with our rapid-fire bullet point rundown. Gold miners show strength as gold nears all-time high. Get ready for this weekend's Woodstock for capitalists. Quote, too early to have full view of Bud Light backlash, says AB InBev, ticker BUD. J&J, Johnson & Johnson, right, ticker J&J. Spin out Kenvue, ticker KVUE. Soars and biggest IPO of the year. Hasn't been a very big IPO year. Icon says short report doesn't impact liquidity. Plans IEP unit distribution. Paramount, ticker PARA, dives as vanishing dividend comes home to roost. Shopify, ticker SHOP, rallies on growth, job streamlining, and asset sale. Goldman Sachs, ticker GS, under government review for role in SVB. Yeah, so I guess everybody's out here getting investigated here. Carvana, ticker CVNA, drives higher on promise of Q2 adjusted profits. Intuit, ticker INTU, is paying $141 million for TurboTax settlement checks. Then AMC Earnings Watch wrestling with a strike and the 8th case. So that'll go ahead and wrap us up and take us out for the pre-market prep session for Cinco de Mayo, right? May 5th, 2023. Happy to be back. Be back on the course, right? Be back in the, in the swing of things. Because I'm a creature of habit, and I start to get that like anxiety creeps in, right? When you're just out here waking up and not every day is the same, right? It might seem like, oh, that sounds monotonous, but that allows you to make sure you're attacking your goals coherently and consistently, right? So happy to be back at the desk, be back with you guys. As always, if you got even one valuable morsel of information from this session, just show love, right? Show love to the account. Go out there, like those reels, comment on those reels. There was a bomb one that was posted yesterday. If you haven't seen that, go like it, throw some fire emojis on it. We've been blessed to be able to continue to grow this community. I want to continue to do that because this is about establishing legacy, right? This is huge. It goes way bigger than us. As humans with a finite life, we want to be looking to accomplish something that goes beyond us, and shifting the paradigm where finance is concerned, right? For people, is huge, right? That is a large goal that can change lives generationally, and that's what we're looking to do right here. Each session, one day at a time, 1% at a time. So everybody be safe out there this weekend. Have a great weekend. Have a great rest of the day. I'll see you back here on Monday. We're back on the horse for the pre-market prep session. Have a good one.